Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, July the 6th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro and micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to during the pre-market session, and then we do live trading and analysis during the course of the RTH trading session. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, first things first, let's get to the news. We did have ADP non-farm employment change, came out at 158, expected 184, previous was 230. Neither the ADP nor the other news at 8:30 gave us much of a move in anything. It was kind of a non-event. Trade balance came out at minus 1.1 billion for Canada, expected minus 0.5. Canadian building permits, though, was a big beat at 8.9% versus 2.5 expected. Unemployment claims were slightly higher at 248, expected 243, previous 244, and the trade balance came out as expected. Further news today, we've got, first of all, we've got the G20 going on right now, so there's going to be a lot of headline news during the course of the day, especially with some of the meetings that are set up for today and tomorrow. So just keep that in the back of your mind. Write it down in your journal that there could be unexpected headline news out of the G20. At 9:45 Eastern, we have final services PMI coming out from the U.S., and then the next big one will be the ISM non-manufacturing PMI at 10 with FOMC Powell speaking, and then we've got today, rather than on Wednesday, we've got Thursday crude oil inventories, and that would be it for the news during the RTH scheduled. We do have Fisher speaking tonight. Tomorrow, more busy day between the week. These were the two biggest days. They're the actual official start of the G20. Then we've got employment change, unemployment rate for Canada at 8:30 tomorrow morning, and then average hourly earnings, non-farm employment change, unemployment rate from the U.S. And then 10 o'clock we've got IV PMI out of Canada, and then U.S. we've got natural gas at 10:30, and then the Fed monetary policy report at 11 o'clock. So fairly decent amount of news today and tomorrow. Just keep that in mind. Taking a look at yesterday, I broke this down into a 15-minute chart so we can show the two holiday sessions against the Friday session. We basically opened up, in range. I'm talking about in range of Friday. We did not get the breakout. We moved down towards the low from Friday. Buyers came in just in front of that, rotated us right back up, and then we stayed in the upper distribution, tried to break out, got as high as 31, came right back inside, tested the LVN again, tried a second breakout, failed again, came right back to the LVN, and then a lower high, and then sold off into the close again. Kind of a boring trading day for the most part. The best trade was I got long at the 2050 down here. That was my best trade of the day, but it was a pretty slow moving trading day all the way around. Taking a look at the macro to micro, I always like to start my day looking at a simple candlestick chart on my paper money and using a 9 EMA, 20 SMA. I'm just checking to see where we are in the trend of the different time frames, working my way down from a monthly. Great slope and separation on the monthly, nowhere near challenging the trend. On the weekly, very important to note that last week we violated the one-time framing up on the weekly, came down and testing the 9, tried to break below, came back up, and so far we're holding the 9 EMA so far on the weekly. But one-time framing has been violated to the upside. We are now getting a possibility of a start of a one-time framing down on the weekly, but we are not below the 9, so the trend is intact, although it is weakening. Going to the daily, I think it's important to note, and I'm going to draw this so that you can see it. Do I have my drawing tools here? We've got a rounding top setting up right here. And this is usually that is usually a topping pattern. You know, we put in new highs and then we failed to break the new highs, failed to break the high, lower high, and now we're below the 9 and the 20, and we've got slope and separation to the downside. So, you know, we haven't broken the key support, and I think the key support is going to be in here around the 2401 to 2404 area. You know, if we break that, then we're looking for the bigger move, and I'll show that you know, on the composite when I get to the structure. But I just wanted you to see that we do have possibility of a topping pattern. We're not out of the balance yet, but it's something that we've got to you know, pay attention to. Going to the intraday, you can see that you know, we've broken down. We're below the 9 and the 20. You know, we have a trend line to the downside. If you go and draw a trend, so we're trending down right now. You know, the buyers keep stepping in, but I'm seeing more, and I'll show you this when we get to the RTH. I'm seeing you know, some strength in some of the selling that we've got coming in. Going to the 1 hour, you can see that we've got acceleration to the downside, slope and separation. We do have a bit of a foobar Mr. Sneaky on the 1 hour with a technical gap. A move up into the 22 to 23 area is going to close that technical gap, and we'll see how we handle that area. And that's going to be a key area for me between the 2150 and the 25 is going to be critical in terms of whether or not the bears stay in control here. Going to the 30-minute, you can see that we you know, we had good slope and separation. We created a foobar Mr. Sneaky. We've closed the technical gap right now. We're trying to get back above the 9, so we're challenging the trend to the downside. So watch this level right here at the 2050 area. Going to the 15-minute, we have broken back above the 9. We're testing the 20 now. We're at a critical junction again, whether or not we break down between this 2150 and the 25. And then going to the 5-minute, we have possible trend change on the 5-minute, and they're coming up and trying to change the trend. We do have a naked cross above here at the 25, so mark that down. If we hold above the 20, if we get above the 2150 and hold, the 25 would be the target and the close of the naked cross. Let me just check on the 15-minute. Was there one there as well? There's not. So it's just on the 5-minute. Taking a look at the structure. So I've moved the larger microcomposite back to the 25th of May based on this dip down to test the 2400. The microcomposite VPOC is still above, so we're below value, and we are not below. We're below the microcomposite VPOC, or price acceptance. We are sitting right on top of the value area low of this microcomposite. So we dipped down again below it yesterday. We've dipped down overnight. Overnight low is 16, so we came within one tick of what is going to be a key over underline for us today at the 1575. You can see though that the 7-day microcomposite balance is down here at 20. So the buyers are still stepping in here and trying to hold us, and it's right on the value area low. If we hold here and come up and accept this 2250, then I would be looking for them to test the other side of this at the 25, and that's my next key over underline, and above that looking for the rotation back up into the 3-day balance, okay, up at the 29.75 area, between 27 and a quarter and 27 70 or 29.75. But key is that you can see that the sellers are stepping in at the end of each session and creating these red days. Now we got a doji yesterday, but the weakness came in on we rallied. We barely, our high overnight is 30.50, which is below the high in the RTH session, and then they rotated all the way down to the 16, and now we're chopping around this 20 area. There's a possibility we can get stuck a majority of the day inside of this wick and chop between the 20, I'd even say 1575 and the 25, and just chop around here as we mature this distribution zone between 2250 and 20. We've got undetermined fair value right here between the two prices, so I'm expecting to see some chop in this area as the auction matures. But the key today is all about, do we hold above the 15 and below the 25? And that's just going to give us a rotational day and chopping and creating further balance around this 2050. But if we break the 15, then I'm looking for that push down to the 1150 and a challenge to last month's low. Okay, the June low, which is at 24.02 and a quarter. Anything below the 01 and a quarter, that's my new key line in the sand, 24.01 and a quarter. The first target is the 95.75, the price that they accepted after the breakout of the value area, this longer term value area right here. There's the value area high. We broke out of it. We accept value at the prior breakout, and then that started this whole run up. So that's your first target. But the main target below will be all the way down here at the 77 to 81 area, and seeing further weakness coming in. Above the 25, 27 and a quarter, 29.75, and then the next line is going to be this 31.75. Once we get above, even call it yesterday's high at 32 and a quarter, look for them to come right back up into balance at 35.75, and the breakout is completed, and we're back into this longer time frame balance. The overnight inventory is about 80% net short in time and value, and price. We've got a triple distribution, a very prominent LVN right here at the 2250, created a nice distribution zone with balance around the 1850 Globex VPOC. Likely that is probably going to shift up at some point in time towards that 20 at the 1950, depending on how we trade here. But keep an eye on the 22.75. 16 is our low, one tick off of that over underline, and then there's another one, which is our value area high, another LVN here, our value area high at 25. And again, that's one of the reasons why I'm watching that 25 area. And then above that, you've got the 26.75, but I'd really be looking at the 27.25, and then of course the 29.75, or the high of the overnight up here at 30. So taking our numbers and moving them over, our overnight high is 30.50. Our overnight low is 16. Move this key line in the sand down to the 24.01. 150. We have an over-under line now at the 15.75. So that is going to be a key trade level. Did I not spell that right? Oh, my keyboard switched on me again. Hold on a second. Keep switching over to the Canadian keyboard with an accent aigu. You don't want. Okay, and then the trade level 19.25. July open is the 24.22. That's just below this 22.75. There's also an LVN, but the range low from the holiday session on Tuesday, I'm going to use that as a trade area, 23, and then my other over-under line is going to be right here at the value area low, the LVN from overnight, the value area high from overnight, the midpoint, and a whole bunch of stuff there at the 25. I'm going to make it actually 25.75. All right, and then targeting the 27.25, and then 29.50 in front of that 29.75, the overnight high at 30, and then at the value area high at 31, I'm looking for a breakout of the prior day range. And I move back up into the 34 and 35. The daily ATR is running at 17.75, so off of the low overnight of 16. Our upside daily ATR target gets shifted to 33.75, just in front of this naked VPOC. And then off of the high overnight of 30.50, our daily downside ATR target is 12.75, just slightly up from yesterday. And that completes that. Looking at the levels below over under, of course, targeting the 12.75 and the 11.50. There's an LVN here at 7.50. Oops. No, that is 7.50. I do want that. And then 05. I'm going to make it 450 because that's a key support level, and then our key line in the sand and our targets below. Okay, so those are the levels, our hypotheses for the day. Well, first I've got to be conscious that we can get stuck in the wick. So I have a hypo 1A and a hypo 1B. And my hypo 1A is a open auction in range, out of value, a rotation up to the 25 to 29 area, finding responsive sellers, rotating us back down, chopping between the 20 and 23 area, and then coming down and failing and coming out and taking out this 1675. So that is my hypo 1A. Hypo 1B is getting stuck in this wick and basically rotation between the 1575 and the 25 area, and a open auction in range, a breakout, false breakout, a move down, take out the 1675, find buyers again, and basically just go sideways, rotating between the 20 and 22 area with a possible push up into the 25, but basically maturing the auction here. Hypo 3 is an open test drive, failure to get back into value, breakdown, sellers step in, come down into the 16 area, chop around here, and then fail and push down towards this 11 area, possibly even coming down into test the 24.0750 area. That is hypo 2. Hypo 3 is an open auction in range, a false breakout, come down, find the buyers again, and then rotate this up through to the 25, 27 area, chop here, push up into the 30 area, and then come up and close back inside a balance up here at the 35.50. And then hypo, the alternative hypo today, which I think is got some credibility to it, would be an open auction, immediately come down, fail the 15 area, push through, and come down to the 24.01, fail, and come down into the 23.90s and close just below 2400, and finally giving some strength to the bearish picture. Okay, so that is my main hypotheses for the ES. Taking a look at gold. Gold continues to see some weakness. We are finding some support. The composite VPOC is shifted to the 25 area. We're holding above it. Key is to watch this this LDN, the upper side of this distribution at the 29 area. Above that, I'm looking for a move up into the 31.32 and the start of a move back up. And a 39 and a 39.20 move down. So far, we're $13 above, and I'm looking for the possibility of this trend change. But we've got to see the weakness coming in on the equities for us to maintain this. Key to watch is the 17 below. Anything below that, then I see further weakness and a move towards the 1200. What I want to show you is what the fight that we're in right now for trend change. And I always watch the 4 hour as a key to my trend change. And we're fighting this MA squeeze, this MA hug, and this is a critical point for whether or not we get continuation and move down, or we hold this level. It was 23 yesterday, now it's 24, 25 level. If we can get above this 9 and the 20, then we can get a start of an upward trend. We're above the 9 and the 20 on the 30, on the 15, on the 5, and we're just consolidating and trying to get this trend change, which is very slow to happen right now. And once we get it, then we can look for the move back up into the 45 and back towards the 56.50, which is where the composite VPOC, the longer time frame price acceptance is. Anyway, that's what I'm looking at in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.